Dear viewers, welcome to yet another edition of Your Life, Your Money. This Friday, the video is for people who are in the early phase of their life, people who have just started earning or in the early phase. I'm going to give you 12 secrets of creating financial success and how you can build a good life. Watch this video till the end. Every one of the 12 steps is very important. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Age band 20 to 35 is a very important age band. That is the time you lay foundation for a very beautiful life that you can build going forward. If you do mistakes here, then throughout your life you will repent for doing these mistakes. So you have to take very conscious steps, very calculated steps, and you should have your drawing board of your life, how you have to build it. Here are the 12 points for you to start with. Point number 1. When you start earning, the first thing that you have to do is sit with your parent. Discuss with them. All these days you were under parental care. All these days you were under the protection of your parent. Now this is an orbit changing phase where you move out of your parents, you lead a life on your own, you have got an earning and you have to build your life. It's always a good idea and it's a courteous behavior. You sit with your parent and discuss about what are the expectations that they have. Reflect upon their life. What is the economic conditions they are living? Are they the ones who are very happy in life? Are they the rich persons? Are they from the middle class? Do they have enough money to retire or not? What could be their health insurance? All these things you must make a list of things what they may need help with. They may tell you or they may not tell you, but you must find out what is the expectations that they have or what you can help your parents with. If your parents have taken an education loan, don't walk away without clearing that education loan. That education loan has to be cleared by you. Likewise, your parents may not have sufficient health insurance. It's a good idea from your first salary or within the first 1 year, you gift your parent with a health insurance or at least a top-up health insurance. This one single move of yours can save a lot of trouble for you going forward. When your parents become aged, if they don't have a good health insurance, either they'll not get good health care or the burden of clearing the bills could fall on you. One small step that you take today can help your parents immensely. It can help you also by saving a lot of money, which otherwise you will be forced to pay in case if your parents are not able to foot that bill. Likewise, your parents could have gone extra mile to fund your education cost. They wouldn't have taken an education loan. They would have funded it from their running income. In that bargain, they wouldn't have done the retirement planning. Check from your parents. What do they have for the retirement days? Ask them. They may tell you, they may not tell you. Most parents may not be able to tell. But make a guess from the economic conditions what they live in. Probably add a to-do list that you should be able to do something to create a retirement income for your parents, because what would have gone into the retirement income has been put for funding your education. So if you have taken a bank loan for education, you will clear a loan. Now think that you have taken an education loan from your parent and make an attempt to see how you can clear these dues of your parents. They will not ask you. It becomes your bounden obligation. One of the best things that you can think of, you may not be able to do it immediately, maybe 6 months, 1 year, 2 years down the line, you can gift your parent with a pension plan. Fund it. So when you start working, you'll not get married that soon. So you have 5-10 years of time interval between you getting married and you finding a job. So use this particular phase to gift your parent with a pension plan. This amounts to clearing the amount of money that they have put for your education purpose. It will also become a helping hand for your parents to lead a good retired life. Dear viewers, I would like to hear from you. Do you think sitting with your parent, asking them about their expectation, reflecting on their life, what needs to be done to make their life much better, is it a good step? Is it advisable or is it out of place? Please do share your comments below and let me know what do you think about it. Point number 2. When you studied, you could have taken an education loan. It is that the parent could have taken this education loan, but the responsibility of clearing the education loan is not that of your parent. It is your responsibility. Please tell your parents in very clear terms. They don't have to bother about clearing this particular loan. You will take care of. That is going to be a big relief for your parents. Don't burden them with the responsibility of clearing your education loan. When it comes to question of education loan, you don't have to be in a hurry to clear the education loan. The government has got several schemes. You can get a deferment of payment of EMIs for your loans in case if you have still not completed your education or if you have still not got your job. Thereafterwards, the education loans can be cleared over a period of 15 years. When you set up your EMIs for clearing your education loan, you have to be very conscious of few steps. 1, even though you are anxious to pay this loan very quickly, thinking that you will pay a lot of interest, but while fixing the EMIs, you have to take a long tenure. Take that 15 years time which is given by the bank, fix the EMI to the lowest possible level. What is the benefit for you? The benefit is that, see, you can fix the EMI for a lower amount, but it will not obligate that you have to clear this loan over a 15 years period. If you have extra cash, you get a bonus, or you have surplus savings on that, you can always come and pay off this particular loan. By keeping the EMI low, you are keeping all the options open for you. There are several things that need to be done in your life. There are several expenses that you may have to put in your life. By keeping this EMI low, you will not fall into the bracket of clearing a hefty amount of money every month. It also gives you a chance to enjoy your early part of your life. Point number 3, save your human life value. When you start in your career, you start earning. You could be at an age band of somewhere between 20 to 25 or well within the 30 years of age when you get your first employment. You have a huge human life value at that time. Let's imagine that you are earning just a lakh of rupee per month. And don't think lakh of rupee is a big salary today. There are countless people who start with much higher value than this. If you are a 25-year-old and you retire at 60 years of age, you have 35 years of work life. Assuming that you will earn 1 lakh rupee every month, and even if I assume that you will not grow in your career, your human life value to begin with will be in the range of 4 to 5 crores. Now, this is a sum which is at risk. The human life value of yours is very important. It is very essential to protect this. How can you do it? You can protect this by buying a term insurance. A term insurance is very cheap to buy. It is very cheap when you are young. But what happens in most cases is that there are people around your life there. They see that you have started earning. They'll come and say, please buy a policy from me. There's nothing wrong with it, but you should be very careful to buy the right type of policy. The right type of policy for you to buy at that type is a term insurance. A term insurance which is not 1 crore rupee. You need to make a proper calculation. What could be my human life value? Try and buy the right type of policy, right amount of life insurance. When you buy, make sure that it is not just the cheap insurance policy that you are looking for. You should buy the right quantity, right tenure. Take the policy at least up to 65 to 70 years of age. Likewise, add critical illness insurance. If you were to die, God forbid, then your dependents will lose that human life value which is there around your life. But what if you suffer from a critical illness? Critical illness is something which will not kill you, but will not allow you to work temporarily or permanently. If you are the sole bread earner and you become a victim of critical illness like cancer, accidents, heart attacks, kidney failures, there are so many of them, then your employer will not keep you on the rolls. You will not have a salary. All these days you will be a support to the family, will start becoming a burden on the family. Therefore, in the beginning of your life, buy a large enough term insurance to cover your human life value. Add sufficient enough critical illness cover. Buying life insurance is cheap. Buying critical illness is expensive. So you can buy about 2 to 4 years of your earnings as a sublimit of critical illness cover. Dear viewers, are you watching this channel for the first time or you are yet to subscribe for this channel? You must consider subscribing to this channel. This channel brings to you 2 videos every week. Every Tuesday, an expert will come and speak on topics of relevant for you: taxation, legal, properties, and so many of these topics. Every Friday, I talk about your life, your money. These are the useful topics, practical and close to life. Do subscribe now. Hit that subscribe button and press the bell icon. Point number 4. Start building emergency funds. This is a basic step of building a good financial plan. Unless you have emergency funds, anything could go wrong in your life and all the things that you have done could be dismantled. So the right step for you to start is building an emergency fund. How do you build an emergency fund? It's a subject by itself. I have produced videos in the past. I'll give a link of this video here in the card section as well as in the description box. Please do watch this video and be guided on step-by-step method to build your emergency fund. Point number 5. Add to your to-do list retirement planning. Retirement planning is a top priority, but it can wait. You don't have to be in a hurry that it must happen from next month itself. It's a good idea that you start today, but if you postpone it out of compulsions by a couple of months, a couple of years, maybe 5 years, 10 years later, sky is not going to fall on you. What is the advantage of starting a retirement plan early in life? The best part is that when you start building your retirement plan early in life, you require less amount of money. The amount of time that you have will help you to grow the money with the help of compounding itself. So you can create more money by less investment. That's the benefit that you have. You may be working with a small salary. You could start a small systematic investment plan for even 1,000 rupees or a 500 rupees. That is fine. Starting early is important. But if you are a person who does not have sufficient enough salary, you are not able to save sufficient enough money to start today, it's okay. You can start sometime later. But it must be there on your to-do list. Don't postpone it indefinitely. Point number 6. Which is the best investment you can do at this age, at this stage of your life? The best investment which can give you unlimited return is not investing in stocks, not investing in futures and options, not investing in cryptocurrencies. The best investment you can make at this stage is upskilling yourself. Add that extra qualification, learn something new, add a certificate, go to another educational institution, work for 1 or 2 years, build some funds. Don't depend on your parent. See from your subject what other qualifications can help you move up the ladder. If you are able to focus on this, upskill yourself, that is the best investment you can think about doing at this age. Not mutual fund, not any other instrument. Put your focus on, know what you should do and upskill yourself. Point number 7. Consciously believe in the evolution theory of life. Life is an evolution. It follows a particular path. That's the way the life will take. We are in a phase wherein which it is a zamana of scratch and win. 2 minutes noodle, instant gratification, instant coffee. But your life cannot go that way. Life will always present you with lot of struggle. The first half of your life will be a phase of struggle. That is where you lay the foundation. That's where you go through a process. Whatever you do during your first half of life, you will be having limited resources, multiple things to do. You have to enjoy your life. There is always a conflict between your resources and the number of things that you need to do. That struggle will remain. That's normal. There is nothing unusual about it. Believe in this. If you do these things correctly during the first phase of your life, the second part of your life will really evolve the way you wanted it. If you try to do all things in one single stroke or think that everything can happen within 5 years or 10 years, that's not a realistic goal to follow in life. Believe that the first half of life will be a struggle. Good things will happen during the second half of your life. Point number 8. A lot of financial success comes from identifying a good financial advisor for you and working with them very closely. This is a day where people try to do it yourself. There's nothing wrong in doing it yourself. But when you are working with a financial guide, you have your advantages. You are working with an experienced person. See, you are 25, 30 years of age. You see from your perspective. If you have a very experienced financial advisor, he would have seen the lives of so many people. He would have spent so many years. He knows what can work, what cannot work. He knows what to prioritize first and what can be postponed. These are the advantages. Plus, you have to focus on your life. You have to focus on your career. You have to focus on your family. You have the requirements of body rest and all these things. There is a conflict of timing which gets involved. It's always a good idea that work with a good financial advisor. Whether financial advisor is required or not is a secondary issue. You must have a financial advisor. The question is, can you find a right financial advisor? That is where you have to put a little bit of energy, try to locate one. If you're a person who is trying to work with a good financial advisor, you can make best use of our services. Send us a WhatsApp message on the number that is shown here on the screen, and one of the financial guides who is working with us could help you to build a nice, good financial life and help you reach your various life goals. Don't delay, send that message now. Point number 9. Focus in life is a must. Everything happens when you have focus. If you get out of focus, anything that you try to do will get out of your hand. Even in case of your life, you should have that focus list. You should have that list of things to do. I discussed various points here. Create that to-do list and you should be focused on that. You must avoid mistakes. If you do mistakes, if these are small mistakes, you can overcome that. But in real life, the mistakes will not be small. Many a times, the mistakes are so debilitating, it can put you behind many years. And in some cases, the mistakes are such magnitude that you may not even able to recover in your life. See, if you do something out of something illegal, you may be booked for that particular case. It can become a blot on your career. You may not find an employment. People may not respect you. So you could be looked on by the society. So avoid mistakes. Always, when you are trying to do, see whether it can result in a mistake, how you can consciously avoid that. Likewise, this is a phase of life where people get into the wrong habits. Before you started earning, you were under parental care. Parents were looking at you, but right now you have become an independent man. You are not looking to your parents for the cash that you need every month, and you could be getting into the wrong habits. This wrong habits is just not about the usual habits what people think of, but habits like trading, gambling, and so many other things. If you get into the wrong habits, the habits itself can pull you down. So have focus, work on to-do list, avoid mistakes, avoid getting into the trap of wrong habits, and I don't see why your life should not bloom like anybody else's. While I give you the 9 points of what you must be doing, the next 3 points are what you should not be doing. The first thing is, do not believe in the concept of retiring early. You would have heard about it, listened about it. It's a myth. It is not possible for you to retire early. For 99% of the people, retiring early is a goal which will never ever be realized. For the small minuscule number of people for whom this might happen is, there is a great element of luck which gets involved in this. So when you say luck is involved in this, so it's as good as to say it's not possible for 99.9% of the population to retire early. We have to pass through that particular age. In your enthusiasm, try to retire early and do wrong things, you will probably never be able to retire. So don't believe that, it will not happen. The next thing that you shouldn't be doing is point 11. Do not trade, do not use leverage. Trading is a zero-sum game. When somebody trades, buys and sells, there is always a winner and there is always a loser. When somebody makes money, somebody else is losing money. If you have made money today, tomorrow it could be your turn to lose money. Finally, I haven't seen traders who have really moved to the glory. I haven't seen a trader who has become a Warren Buffett of investing world. Investing and trading are two different things. Trading is speculation. You buy something with an hope that it will go down in prices or go up in prices. It may happen, it may not happen. Whereas an investing is a completely different activity. It is like, you buy a business, expect the business to increase in its sales, increase in its profits over a number of years. It's fine to invest your money in a mutual fund or a good stock, that's fine. But that will consume many number of years or even decades together. But trading is instant gratification. And when you combine trading with a leverage, it can cut on either side. If you called it right, you may make lots of money. When you make lots of money, you become complacent. If you lose money, on the contrary, it can be a big loss. When you lose money, what do? You take revenge on it. You try to recover your money. In both the cases, the outcome is same, whether you win or whether you lose. The outcome of complacency, outcome of taking a revenge, you will fall into much bigger ditch. So don't do it. Just avoid trading. Just avoid using the leverage. Let anyone tell anything. It is for them. It is their business they are promoting. They have nothing to do with your well-being. This is the last point. Point number 12. This is where your parents could be not guiding you well, or it could turn out to be a wrong advice from the parent. Do not buy big properties or do not buy properties in the beginning of your career. If you try to do it, what happens is you will not be able to build your emergency funds. If there were to be a problem in your career, you will not be able to service it. You will not find required amount of money to enjoy your life. Avoid buying properties in the beginning phase of your life. At least avoid the first 5-10 years of life till you settle down, till you have built emergency funds, till you are very certain about your career path and you have upskilled yourself. Avoid buying big properties. It's just not buying big properties. There are other things which can drain you, like buying a fancy car, frequently changing the gadget, and being in competition with your colleague or a friend of yours to show off. All these things will create a big hole in your life. Avoid these things which will create a negative effect on your life. If you heed to these 12 points, the 9 things to do and the 3 things what you shouldn't be doing, I do not see why it is not possible for every person to take their life to a completely successful orbit. Dear viewers, hope the video that I have done today could have helped you to understand the points on which you have to focus to do and what is that you should avoid. If it did help you to understand the success points in your life, please do like this video, subscribe and share with your friends and relatives. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Friday with yet another edition of Your Life, Your Money. Stay safe till then.
Press the bell icon for more details and subscribe our channel.